Hello, here we are again. Okay, we'll try this again. I just tried to start it and I got a phone call. So anyway, Ken Krager with Black Swan Financial Advisors, and again, community at Possibilities Achieved Facebook group. You know, please join my group that we support, supporting families and family members with special needs. So anyway, I'm going to try this bonus video again. Here are some websites related to Black Swan, Possibilities Achieved, and then my YouTube channel. Please subscribe to my YouTube channel. And this is videos for educational purposes only. I have some trades I need to do in my account. I got to roll. Basically, I've been selling some options, and they expire tomorrow, so I'm going to go look at it and see if I can close out, maybe start a new trade today. So that's what I'm going to be doing. So let me show you here. This is my account, and you'll see here that I own a put. I actually own 5 puts. This is technically a spread, so you'll see that I own June, but I sold, that's a minus sign right there, so I sold 5 puts, $15.50 puts that expire tomorrow. And you'll see that this part of the trade has been going against me. Because if I click right here, you can see the current price is $14.15, and so if I don't roll this trade forward, I would end up getting put 500 shares of this stock. Okay, and that's one of the reasons that I did the spread, was so that if I got put the stock, I would have paid $15.50 for it, but I could turn around and sell it for $15 right there, even though the price might be $14. Okay, so my total exposure, my risk, all my capital at risk is only 50 cents a share. So 500 shares is $250. Okay, so that's why you might do a spread. I've been doing this trade every week for months, and probably 80% of the time, this put that I sell, these 5 puts that I sell, end up expiring worthless, and I pocket about $300 every time. So what I need to do is I need to roll this forward. I'm actually going to wait till tomorrow, because if the stock market goes down tomorrow, this will go up. This is a triple leveraged ETF related to the S&P 500. So I'm gonna wait till tomorrow. So this one is my other spread. You can see that here. This is on the gold miners, GDX. Again, out in June. I bought 5. So my total capital at risk is $3 a share. So 3 times 500, $1,500. Okay, but you can see that this one, if I click on this, the current price is $32.46, and this is a put. So if price was below $31, just like up here, it's below $15.50. If it's below $31, I might get put this stock. And you want to watch these trades, and you want to make sure that you roll them over ahead of time if they're going against you, because you might actually get put the stock, and that's happened to me before. And then I have to either sell it, or I have to, sell the put I own and close out the spread. So anyway, what I'm going to do is I'm going to roll this. I'm going to buy this one back. I'm going to buy these 5. They should cost me about a penny, 1 to 2 pennies each. And then I'm going to turn around and I'm going to put. And since it's $32.46, I'll probably sell at $32, or maybe at $32.50, because I'm still still pretty close to my insurance put there. All right, so bear with me for a second because I'm going to go to my options trader one here. So let me go over here, pop up my options trader. Okay. Okay, let me see here. Perfect. Okay. So you'll see me over here, GDX. Okay. I'm going to do the strategy builder because like you said, see, this was a spread, and I need to buy the one that I sold. Okay. So I need to buy that one back, and I'm trying to remember what it was. Bear with me for just a second. I got to make sure that the prices are what it is that I have. So hold on, bear with me. I'll show you. Hold on. Go back over here and pop up this guy for a second. Okay. Okay. I should have moved that over. All right, let's try this again. All right, pop this guy up. We're good. I have the other one up on my other screen so I can see. So the strike price was $31. This one right there, 31. I should have remembered 1 to 2 cents. 31. So I need to buy that back. So I need to select buy, and then I'm going to go out to next week. Current price is $32.48. Now gold's been going up, so there's a chance that it might continue to go up. You can see the prices here. This is 40, get about 40 cents a share, or I can get 62 cents a share. The more conservative one would be the 32. So I'm gonna do the 32 because remember my insurance was at 28, so that gives me a $4 per share risk total. But I have 5 contracts, right? So I want to make sure that I do this now. Right now, when I close this out, I got 51 cents per share for those 5 contracts, which is $255. I'm going to probably pay a penny per share to buy it back. So I should net about $245 to $250 when I execute this trade. So I'm going to execute it. Okay. Let me go back over here. Okay. So my trade, it's sitting, I got to adjust my price just a little bit so that the trade will execute.
Order partially filled.
All right, so my trade executed there.
Order filled.
So, alright, let me just show you here. Okay, so my trade executed. Let me go over here. Now you can see my one spread closed out. See right there? It's closed. Okay. My new spread, I have next week's, I sold 5 and I still have the 5 that I own. Okay. I did a trade there. And you could see how it was done. Tomorrow morning on Friday, remember options expirations are on Friday. I'm going to actually hope that the market crashes a little bit tomorrow, so that my trade goes. Now you'll see here that you'll see those covered calls. I have some covered calls. So remember, I told you for every 100 shares, you can sell a call, right? So for example, DocuSign, I got into it by selling a put. So my real cost was probably around $56. So I'm actually in the profit right now. But I sold the call at $62.50. See, quite a bit above what the current price is, and I got $2.14 a share. Okay. You'll see I did PayPal the same thing. My cost basis on PayPal was 77. I sold a call for 80. So even though these trades are going against me right now, I own these stocks, and you see that I'm generating some income, right, off of these stocks. And so PayPal would have to get over 80, and if it gets over 80, these shares would be called away from me and I wouldn't own them anymore. But then I'll just sell a put on it and get it back. So anyway, that's kind of how it works. Awesome. Thanks, everybody. Thanks. I hope that was beneficial. See you later. Bye. Again, Ken Krager from Black Swan Financial Advisors. This video is for educational purposes only. There's some websites. Thanks. Bye.